Fridays with Deontay. Hopefully you and your loved ones are safe wherever you're watching this video. I'm not going to waste any time. We're going to jump right into it. There's going to be a lot of concepts and terms that I'm going to throw at you and things that I believe matter when it comes to trading any asset class. We're also going to talk about NFP and a model that I think really captures what happens during that event. So let's jump right into it. So here we're looking at the DXY, and we can see here, granted, hindsight, price went up and came down. Now, many people are going to see this line here, and you can see it says Sunday's opening price. Now, this is my natural line in the sand to tell me when I'm overbought, right, being in a premium, or oversold, being in a discount. When price is above Sunday's opening price, which is also the weekly opening price, just to clarify, tomato, Sunday's opening price, anytime price gets above it, it's in a premium. You're going to find ideal sell scenarios here. That doesn't mean as soon as price gets above this line, you need to be looking for sells. You need something to happen in order to find that setup. Same thing vice versa. When price comes below discount, you're going to find ideal buy scenarios. But it doesn't mean as soon as price drops below it, immediately look for buys. You need something to unfold. You need a procedure to find that setup. You're stalking a setup. Now, what that may look like for you may look different from me, right? So Deontay may trade a little different from you, and it's okay. But do understand, this will keep you on the right side in finding setups. You want to find the best setup possible. You want to take the least risk to your equity. You're going to want to use this and have this on your chart every single week. It helps me from understanding, okay, I shouldn't be looking to be buying above Sunday's opening price for intraday trade. Same thing vice versa. I shouldn't be looking to sell intraday if price is below Sunday's opening price. It's just not ideal. Now, there are going to be situations and cases where price is above Sunday's opening price and it continues going higher, and there are buy setups. Same thing vice versa. There are going to be times where price is below Sunday's opening price and there is sell setups. But it all depends on what you as a trader are willing to get into and take speculatory risk. I personally like to wait for price to get in a premium and find a sell setup. I like to wait for price to get in a discount and find a buy setup. It tends to work better that way for me personally. Now, just looking at the line that we have on the chart, Sunday's opening price, you can see the sensitivity to the price action here around the line. Look at how it threads like the needle back and forth. It's threading that line back and forth. Every time it hit it, we can see there was a reaction for the DXY. Price came above it, came down it, came back above it, hit it again, ran up, hit it again, ran up, and eventually it started trending higher until it got to Thursday. And Thursday made the high of the week. And ever since then, on Thursday, you can see it breaks down. So there was a nice selling opportunity here. Now, the selling opportunity that is occurring here is happening at 10 a.m. Now, 10 a.m. is the London close setup, right? Or the London close session. Correction. This is the London close kill zone. Now, generally, in the London close, it's going to be a reversal. The characteristics between this time period, 10 to 12 p.m. New York Eastern Standard Time, it's going to be a reversal. And we can see how price comes up, raids the previous daily high once again, because it does it here earlier at midnight, raids the high here, and it comes back into that again, runs the high again, or the high that it formed for Thursday itself, so it creates a newer high for the day, and then it starts breaking down for the rest of the week. So Thursday, you can see here, a London close reversal unfolds here, and it continues to sell off. Once we got above a previous daily high, you can look for sell setups, especially if you're in a premium. So if price raids the previous daily high, I generally will look at that as, okay, can I find a sell setup during London, New York, or even London close? Now, sometimes it may not form in London, but it may form in New York. And it may not form in New York. It may actually form in London instead, or vice versa. Or altogether, it may just happen here, as you can see here, during London close. So London close comes up, and then there goes the sell opportunity. That's the condition here. A simple condition. Price comes up and takes out what? A high. So price comes up and takes out that buy side liquidity here that it formed earlier at 12 a.m. So it creates a new high and then sells off. You'll also see there are times where the market raids the previous daily high and there's a small scalp opportunity. For instance, we could take this high here and mark it off here. You could see, we'll take off the London close sessions. You can see here, look how London, right, runs it and then gives you a nice selling opportunity. So it goes from buy side to sell side. So we're using, let's say we're utilizing the Asian session high and low as our opportunity to find a setup here for the DXY. Now I know most people don't trade the DXY. It's pretty unorthodox, but we can see that if we were to utilize the Asian session high, Asian session low, look at how London takes out the previous daily high, right? Or runs back into the previous daily high and gives a sell setup to run back below the Asian session low. So right here. So there was an opportunity here, a sell setup. So that meets another condition here. Where are we in price when that sell occurs? Above Sunday's opening price. And if we were to take it a step further, we're above London's opening price, 2 a.m., right? If we were to do the same thing and draw a dashed line for 2 a.m.'s opening price here, let's say it was there, we're above that 2 a.m. opening price point here. Same thing for midnight opening price. So if the true day range, 12 a.m., we can see the opening price is here. If I could get it right there, yep. And if we were just to look at that day individually for London close, let's just go down to the 5-minute to view it. You can see, 1, we're above Sunday's opening price here. 2, we rated the Asian session high. London starts, we're above 12 a.m. opening price here. That's 12 a.m. That's the buy side above. So these are the things that I utilize when I'm looking at intraday. Very simple ideas, not too complex here. Taking the high of the Asian session, taking the low of the Asian session. Buy side liquidity, sell side liquidity. You got that consolidation here. You can see how the sentiment is being built up just prior to the new day, the new IPTA true day, just before the next kill zone. Price runs. Many retail traders are thinking what? Break, retest, go long. That may not be the case. Instead, we see something completely different happen here. Price breaks it, comes down, comes back up into it, and then gives a sell opportunity. But where is it selling into? It's selling right into the Asian session low. Right there. Coming back down to that sell side liquidity. I took it off. There it is. That sell side liquidity there. But you can see we're above 12 a.m. opening price and London's opening price and Sunday's opening price. So there's a triple confluence here with the catalyst of breaking the Asian session high, or also aka the previous daily high. In this situation, the way we have it marked up on the 1 hour, midnight to midnight, we're acting as if this was the full day here. It runs the previous daily high. That's the catalyst here. So that's like a little turtle soup opportunity here. So price comes up, takes it out. You can see there's a fair value gap here, right? That London runs into. That one here, right? We even have one a little higher than that, but there's no market shift that occurs here. But you can see how these fair value gaps still are used in price. Look how it's utilizing the inefficiency here. The algorithm is utilizing this liquidity void that has these fair value gaps in it, runs into it in a premium, and then runs lower. Right back down to the Asian session low. That's something very small that many people don't think about utilizing, is the Asian session high, Asian session low, and the opening price to the actual session itself. Because we know if these markets are controlled, they do the same thing on all time frames. There's just more data and more candles to make up the larger, higher time frame candles. The same thing you see on the daily, weekly, monthly, and even the yearly happens on these lower time frames. It's just a lot more data that's unfolding in front of you. Many people will sit here and say, oh, that's noise that you're looking at, right? It's too much, it's choppiness, but it's the same thing you're looking at on the daily. Swing highs, swing lows, inefficiencies, gaps, breakers, bullish order blocks, volume imbalances, whatever PD array that you're looking at, old highs, old lows, turtle soups, reversals, consolidations, expansions, list goes on. It's the same thing constantly. The flow is over and over and over again. And you see how price easily gives you a sell setup back down. And where does it buy? You can see how it gets below 2 a.m.'s opening price, and they start buying again after rating sell side. And it runs all the way back up. And that's what we see there for that day. So that's the DXY, just briefly. And we'll talk about the NFP towards the end, and a model that I think really works well with NFP. Not saying this is something you should do, but backtest it and see how it works on other NFP days as well. So that's dollar. Right? You guys know my stance on dollar. Seasonally, July was supposed to start off bullish and then turn back to being bearish. Before this sell-off here, if you're up to date with the daily updates, you'll see there's a swing high. You can see that's that Thursday. That's the swing high I talked about on the daily updates. And you can see how price runs it here on Thursday, and ever since there, it breaks down. Same idea that I'm showing you here with that London session. Runs a high, then breaks down. Same thing here on the higher time frame, but on the daily. Runs a high, then breaks down. It's no different here, guys. It's the same thing, just on a higher time frame scale. Larger candles, a lot more data here, right? The data is much more concise. It's a full trading day, but the same patterns are unfolding here. That daily, we'll just mark it off here. Swing high is right here. We'll make it red so you guys can see that. And you can see it right there. That's Thursday. Runs that swing high. And ever since then, it runs lower. And it ran lower, taking out swing low. So that swing low here, and then this swing low as well. Potentially, even maybe the 20-day look back low is in range. And like I said, possibly those equal lows is what we're going to target for the rest of July. So I want to see that happen. But I know I'm expecting some type of pullback, then a sell again. Maybe we run back into July's opening price once again. Sensitive price point, right? Same thing with Sunday's opening price here. It may run back into Sunday's opening price again, but then give a reaction away. You can see how this candle opens here, runs up into it again, and then sells off. That could happen here on the higher time frame as well with the monthly opening price. So just pay attention to that as well as we progress throughout July. So that's $1. Let's move on to what we're actually trading for the month. Not that I'm not trading other pairs as well, but what was voted on in the channel for me to track was gold. We'll take off this. Same thing. Doesn't change. Sunday's opening price or the weekly opening price. Look at where the market is giving those sell opportunities. It is night and day when you put this on your chart. No indicators needed, right? I don't need an overbought, oversold RSI, MACD, Ikomoku Cloud, whatever indicators there are, right, to exist to tell you that price is overbought, oversold. Oh, these two lines are crossing, so that means, EMA did this, blah, 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 blah. I don't even know that stuff because I haven't been taught that. But we could see anytime a sell setup did unfold, it most likely was above Sunday's opening price, and there was a catalyst of breaking a previous daily high. Take, for instance, here Wednesday. We can have a clear reaction here, right? Price breaks down. What does Wednesday do? It runs Tuesday's high. See that? Runs Tuesday's high. When does that occur? It occurs during the New York session. So there's some type of setup unfolding here during the New York session. So price comes up, takes out the previous daily high because there's what above this high? Buy side liquidity. What's above buy side liquidity? It's going to be orders, right? So stop orders. Anybody that was selling on this down here, they most likely put a protective stop loss here. So that's the buy stops. They run the buy stops and then they break it down. So if we were to look at this with the indicators on, right, the session indicators, there you go. You have New York running up into it and then breaking down. Let's just take a look intraday to what happened here on Wednesday. So we'll bring it back here. Let's go back. Let's do the 5-minute here. And we'll break it down the same way we did the London. So we could see this is the opening price for the New York session. Put it in black. That's 7 a.m. open. That's the New York session. Same ideology here. It's acting like it's Sunday's opening price. Think if there was 2 arrows here and premium was above and discount was above, just like Sunday's opening price. Look at how the market gears itself to pull itself up, right? Pulls itself up above 7 a.m. on purpose for the sell setup here. Catalyst running the previous daily high and then price breaking down. Now, you may have not caught an entry here. Me personally, was I trading this day and looking at it? No, not necessarily. I was mainly focused on Asian session models and other things. But we could see that price runs up, takes out the high, then goes short. And what does it run to? Runs out the London low. So the low that it formed earlier in the AM session, it runs that and creates a lower low for the session here. And it gets right back down. You see this data line? That's Sunday's opening price. Look how price hits it. 1, 2, 3, 4, 5 times. So multiple times it hits it. And I just want to play it out to see what else happens after hitting that line. So that's London close right there. And you can see how you got that small reversal, right? Going into 10 a.m., it hits Sunday's opening price, and then it runs back up. Let's see what happens when it hits the line again. Look at it hitting the line. That's Sunday's opening price, finally breaking through it. And then all of this now is just a dead zone. Shouldn't be trading after 12 p.m., in my opinion. So after this orange highlighted area, 12 p.m., just don't even look for setups. If you are holding an intraday setup and you're able to catch a trending environment, hold on, and then, have a trailing stop above swing highs or highs that you think will not be rated potentially. And that's how I would play that out. But the same fractal idea that I'm showing here is occurring here. Look at how they pull it above 7 a.m. Even if we were to utilize the same thing here that we talked about with the DXY, let's go back a second. Let's go back right before London starts. So if we look here, take the Asian session high. We take the Asian session low. Now, I'm not saying this is the model that you need to follow, but these are things and tips that I personally think is important. And we wait for London, right? We wait for the kill zone, and we wait. What happens here? Boom. What are we rating? Sell side. Instantly. We're rating sell side. We know that. How do we know that? Because clean lows, and it's also the sessions low. Asian session low. Asian kill zone low has been rated. What is going on here? We can see sentiment is being built up towards the end of the Asian session. Normally, you're going to see that. Generally, you will see that. But overall, you see that it was trending down first, and then it started consolidating, which is not a problem. But you can see normally towards the end of the Asian session, the last 2 hours or last hour, price starts to get real tight. And we see that going into if the true day. So let's mark off midnight opening price. This is how you should be breaking it down. In my opinion, this is how if I had to go back and tell myself 6 years ago when I started trading Forex, this is what I would tell younger Deontay, right? Midnight opening price. That's 12 a.m. Or let's just say true day open. That's 12 a.m. Same idea with Sunday's opening price. Think about an arrow above it and think about an arrow below it. Anything above is ideal sell. Anything below is ideal buy. What's the catalyst here? Price is sweeping sell side. You're in a kill zone, and you're waiting for price to probably potentially give you a buy back up to what? Buy side liquidity. Now, I'm not going to sit here and say, oh, here's the entry and this, next, and third, because I wasn't watching it at that time. Because I personally don't know what the price action structure was during this time on Tuesday. I wasn't looking at it like that. I've been really focused on my swing trades personally. I'm a swing trader at heart. Many people ask me all the time, what's your trade model? What do you do? I'm a swing trader. If you've been following me for a while, you know I enjoy those swing setups. Doesn't mean I can't intraday trade. Definitely a guy that has a few tools in my arsenal. But you can see how here price, once again, is running back up. But look at where price brings itself for the London session. That's 2 a.m.'s opening price here. That candle starts the London session. That's 2 a.m. open. Same idea. Look at how it drops below the open, and then it sponsors itself to buy higher, to run back up to what? The Asian session high. That is a model there, guys, right? Got that Judas swing. They're getting everybody to think it's going to sell. Psych. Doesn't do that. Commercials then come in, push it back up. Now, there may be some type of entry technique that you personally would like to see here. I'm not going to sit here and try and analyze it, but just showing you what it looks like conceptually. Sell side, buy side. Boom. That's what trading is, guys. From a very simplistic way of looking at it. Buy side to sell side to buy side. Now, we could get advanced and talk about, accumulation, reaccumulation, distribution, offset distribution, internal liquidity, external liquidity. I try to stay away from those key terms, right, that, many people have learned from ICT, Michael Huddleston, because it tends to confuse a lot of people. And plus, I don't want to be using terms that I'm not super familiar with, that I don't even utilize myself. right? I'm not going to sit here and portray that I know what these things are 100%. If I speak about it, then I know about it. If I don't speak about it, I truly don't know about it. Which is why you hear me not talk about certain models that other people are talking about. 90-minute cycles, 30-minute cycles. I really don't get into all that stuff because I know what my trading model is. I took a very simplistic approach when it comes to trading. And this is how I look at it right here. I'm showing it to you here live. Sell side raid, going back up to buy side. Now, if I had to, people maybe say, oh, but how about the entry? What would you look for? What would you look for? Any fair value gap on a lower time frame would probably get you back up there. There's probably some type of fair value gap that stands out way more than others. And the fair value gap is most likely going to break a swing high. So which fair value gap would that look like? It would look like this. Right here. See that swing high? And we'll zoom in. That's a swing high formation. Make it red. If you zoom in, that's a swing high formation. Hence, we're below midnight opening price and 2 a.m.'s opening price. So that's 2 a.m. That's midnight. That's the Asian session low, the blue line. There goes the fair value gap that breaks a swing high. So here to here. That's your fair value gap. Bing, hits it, and ever since then it runs higher. Right? And then you'll see a trend unfolding as well. What happens here again? Look at this swing high. A swing high is broken with what? Speed. There goes your fair value gap. Look at our price trades back into it again. So these patterns definitely unfold over and over and over again. Some are more obvious than others, right? You got to just train your eyes to see this. But this is generally what I like to see in a good setup for a buy. Speed through a swing high, price trades back down into it, we get a blast off. After a down close day, there's buying. Or down close day, because I'm always on the daily time frame. Sorry about that. After a down close candle, look at how there's buying. Down close, down close, down close, down close, there's buying. Down close, buying. Down close, buying. Down close, buying. Down close, buy, 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 buy. Down close, down close, down close, buy. Down close, buy, buy, buy. It's the same thing I show you guys on the daily time frame. Just for a brief second, just to explain what I'm talking about. Take for instance here. Look, this is May, right? This is not the beginning of May, but this portion is May, right? Mini portion all the way up into June, May into June. Look at all the down closes in May. What happens after these down closes? Buying. Down close, buy, buy, buy. Down close, buy, buy, buy. Same fractal idea that I'm showing you guys here. Same idea. It doesn't change. You get the down close, price sends the buy up higher. You can even see here, look at this swing high. The higher time frame fractal. Look at that swing high here, rated with this fair value gap. See the fair value gap here on the higher time frame? Look at that. Price trades back into it, trades higher. Got the down close, swing low, right? There's a swing low that's forming inside the inefficiency on the daily time frame. It's the same thing here on the 1 minute. Look at how each time price is about to rally, it's making a swing low inside the inefficiency. Look at that swing low. 1, 2, 3. We'll mark it off in blue so you can see that. We'll take off the session indicator now that we know we're in London. See how price creates that swing low formation? And what is also happening? Higher swing lows. Look at that. That's a swing low. That's a swing low. Is someone lower? It is lower. Look at that. It's showing you signs that it wants to go higher, guys. Higher swing lows, higher swing highs. Swing highs are being broken, but swing lows are being protected. Now, does that mean swing lows will always be protected in an uptrend? No, because there are times where price will do a raid on stops. And sometimes that may stop you out because your stop loss may be there or close to it. So price could come up, right? Price comes down, creates a higher swing low, runs a swing high. You see the fair value gap, you go long, but instead price may pull all the way back down here, run it, and then go back higher. That you just got to live with. I can't tell you anything else to protect yourself from that. If you have a larger equity, maybe you can endure more risk and have a, heftier stop loss. But for those that have smaller accounts, your stop loss is probably going to be a lot more tighter by these swing lows. Price may run that, and you're going to have to live with that. But you're going to have to, either reduce your risk by the next trade position that you get into. So the next trade you get into, you can't risk the same amount. Reduce the risk. Maybe 0.5% instead of a full percent. Or let's say you risk 2%. Reduce the next trade to 1.5%, right? 1.5 risk. Or if not, you risk 1%. But just make sure the next trade setup, if you do take a loser, reduce the risk. So make sure you get back to the equity that you lost to then start gaining or putting on the risk that you would like to gain to keep compounding your account. And that's simply what I like to look for when it comes to intraday setups. It's nothing too fancy. The bullish breaker, I know you can find those things too. The mitigation, yes, you can find those. But this, me specifically, I like to find this setup. I like this one. This is the one I pick. Many people get really critical about, oh, but what about that? What about that? Hey, you may have saw that. Congrats. I'm happy that your eyes were able to see that before me. Or even if I did see it, I may have not even taken it because I'm not familiar with wanting to take that setup. I'm familiar with taking these setups here. That's my ideal one, here and here. I like that, personally. Other people may disagree. But I'm just showing you what I utilize when it comes to trading. And ever since tapping into those fair value gaps, look at that. Look at how price runs higher. But look at where it is. Below 2 a.m., below 12 a.m., below the Asian session low. Back up to the Asian session high. That simple. Does that mean it's always going to unfold like that every single day for you? No. Nothing is truly 100%. These markets are all coded and things can change on a day-to-day basis, on a minute-to-minute basis as well. So the fundamentals sometimes goes right out the window. Many people say I follow fundamentals straight to the line, but you're not the bank and you're not the commercial speculators and you're not the algorithm. The fundamentals can completely change. Sometimes it's the PMI numbers that it's more important. Sometimes it's the retail house numbers that are more important. Sometimes it's the CPI numbers. Sometimes it's NFP numbers. Sometimes it's the construction numbers. Those fundamentals change. That's why I don't really focus on news so much, because some news events will be very exacerbated, The news will cause the market to tear really strong to one side. And then all of a sudden a high impact news event comes out and it doesn't really do much to the market because the fundamentals change, because the market doesn't care about those numbers anymore. Same thing as well. The numbers could come out positive, which could signal, maybe, I'm not saying for every single news release, but let's say the idea is that if the numbers are positive, that means price action should reflect upward trend or bullish scenarios. Sometimes that's not the case. The numbers are positive or the numbers are beating expectations, but the market drops anyways. Why is that? Fundamentals go out the door. Same thing vice versa. Sometimes the numbers do not meet expectations, right? And it's underperforming, but for some reason the market still rallies. So the news, it's just nothing to pay attention to. It's just an excuse for the market makers to come in and say, yeah, we're going to pump up the market because everybody's brought to the table, right? They bring everybody in. It's like you're at the casino. They put all the best machines in the front, all the fancy ones, all the cheap ones to get you to spend your money quick. That's what the news releases are. It's the same thing. They get you to come and sit at the table, pull your wallet out, pull out your credit card, swipe, 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 take your money. Rinse and repeat. And they're really good at it. So this is gold. Cut this off. I'm going to clear this real quick. So I'm going to see if there's anything else here on the chart that I want to talk about, just viewing it right now. See how price comes down here for Thursday too? Look at how Thursday, it's in a discount, quick repricing down, right? What happens? Price fills it and then some. Price fills it and then some. So price comes all the way down, takes out the previous daily low. This is Wednesday's low here. Takes out Wednesday's low, and during London close, as I said, normally you're going to get that reversal, or it's going to start the reversal, right? It could be another turning point. London close, it's another tip or gem. London close can be the start to a new trend. Hear that again. London close could be the start of a new trend. So if you want to catch a turning point or a new trend that's going to unfold, it may, I'm not saying 100%, there is a possibility the turning point is going to happen in London close. London close is going to start your reversal. And you can see here, London close starts it here. Doesn't really do much throughout the rest of the day, 12 p.m. Like I said, this is the dead zone. After 12 to 8 p.m., you're normally going to have consolidation. Price comes all the way back up and starts that new trend. It all started down here. So hopefully that was really insightful to you guys here. Now, I want to talk about NFP. Now, I don't trade NFP, but I did notice a model that I have saw, right? It taking all the information that I've learned together through ICT, through other people that helped me throughout my journey within the trading community. I've realized that a model that is really feasible with NFP, and that's going to be the New York model. Now here I'm looking at USWSI. Now I don't trade USWSI, but I just want to show it here, right? So this is 8:30 right here. That's that 8:30 candle. So that's the time of the news event. So that's NFP. And we're going to look at a few other pairs as well. So that's NFP right here. So we'll mark it off as NFP, and that's your 8:30. Now, the New York model essentially is taking the London lunch, which is going to be 5 a.m. This is here to 7 a.m. Get one candle out. There we go. 7 a.m. Now this is the London lunch. So this is 5 a.m. to 7 a.m. once again. I don't trade during this. To me, it is a dead zone. Or you're going to most likely face a harsh retracement to price action here, or you're going to face consolidation. The fact that I'm going to face those conditions, I'm just going to leave it all alone. London lunch is going to set me up for the New York model. Now, granted, this is just an NFP example to explain. I think that this model, like I said, go back test it, but I'm just sharing it to the trading community. I think this model will help people really capitalize during NFP. Now, does that mean you're always going to get an entry? No. But the conceptual idea of it and seeing it on play, I think it's something it's worth watching. So then I find the swing highs and swing lows that form inside of that session. So the swing high that we have here is right there. So what's above a swing high? Above a swing high is going to be buy side liquidity. That's your buy side. Now anything below this is going to be sell side liquidity. So swing low. Now I'm only taking the ones that are unbroken. They have orders still residing above it. I was not going to take this one here, and I wasn't going to take that one here. Sometimes there's going to be, and if you look at other examples of other currency pairs, you're going to see how they look and how I would mark them off. But I'm going to mark off any of the swing highs and swing lows that are unbroken. So I can see here, this is the swing high. There's another one here. And that's also buy side here. Now, going into the New York session, I'm going to utilize the same thing I was talking about, the opening price. So if we go forward one, this is the opening price here. I'm going to see how the market is all rigged. It's all rigged, guys. It's a rigged market. See, my laptop is dying. Give me 1 second, guys. I'm going to edit this out. So we're going to look at it like this, and then like this. We'll drag it out even further so we can see it. Here and here. So the premium, and I got our good old discount. So we play price forward slowly. Let's see, price is treading. Boom. So we get a raid on a swing high here. So let's just go down to the 1 minute time frame just to see what's going on here. Like I said, I don't trade USWSI. Did I know what was happening here while the price was trading? No. So this is new to me as well. So I'm just looking at it and breaking it down as we're going along. Swing high is broken, so I'm expecting, me personally, if I saw this, I was like, okay, a sell scenario should unfold. But we do know we have that event that's going to happen here at 8:30. That's the most anticipated event right here at 8:30. Now, if price breaks a swing high, I'll most likely say, okay, turtle soup setup. Can we catch a reversal here? The reversal phase, right? Turtle soup, and then we get the sell off. We do have this high up here. It is relatively equal to this. So these are clean highs. You see that? On the 1 minute, very clean highs, right? The algorithm engineered these highs on purpose. Look at how it stalls there. Creates equal highs. Perfect almost, right? Runs up even higher. Still no fair value gap. And you can see here, there's a fair value gap here, right? But does this fair value gap make any market structure shift, breaking a swing low? No, we don't have that here. Play it out. And then look, 8:30. Look at how it crashes right through that swing low that was left here during the London lunch. Isn't that very interesting to see? This model is similar, very similar to the Asian session model. I'm just taking the New York lunch, and then trading the Asian session the same way. But here's the New York session model. I'm taking the London lunch to gauge the New York. Look at how we went to buy side to sell side. No different, guys. And this is on NFP. There's no different. Could have been vice versa if the trend, right? Because I know NFP is most likely an event that pushes towards the higher time frame trend. You can see how it goes. It could have went this way instead, right? If the higher time frame trend was saying bullish dollar, right, and weak Swiss franc, price would probably do that instead. But we can see today it does the inverse. Price comes up and then sells off right before 8:30. Now, 8:30, you're not going to, I'm telling you, by 8:30, you're not getting an entry. Price has already left you. Many people will try and twin trade it, you know, put a stop, buy stop here, buy limit here, or sell stop here, or sell limit there. That's just going to make you lose more money than you should. And you're just gambling, you know, you're just trying to get a piece of the pie real quickly, you know, you just, you know, trying to get in, try to run maybe 10, 15, 20, 30 pips in one direction. But then you realize by the time you get in, it's too late. And then you're in drawdown and then you have to collapse the trade. And it would have been better if you just would have kept to the sidelines. Tell people this all the time. And you can see NFP comes around, get that candle, and it just takes off. It just doesn't even give anybody the chance to get in at that point. You would have to probably get in just prior to NFP, right? Some type of idea that'll get you into NFP. And that idea probably would be any fair value gap. So let's say this one, there's one here. Not to say I would have known that this was the fair value gap that we would go lower, but that is one that is above 7 a.m.'s opening price. This is another one as well on the 1 minute. Now, this may look different on like the 2 minute or 5 minute. Let's just say, let's look at the 5 minute and see if we have any fair value gap there. We don't. Let's see if we go to the 3 minute and see if there's any fair value gap. There's a very small one here, but price doesn't trade back into it. Let's check the 2 minute out. And you can see there's one here. There's that larger one here, right? Price trades into it and then sells off. So in order to catch that NFP move, you have to be in the market just before the news is going to drop. You can't try and get the trade in after NFP drops. It's ludicrous to try and do something like that. But I've noticed this, and I think this is something worth towards the community to try and backtest and see if it's something feasible. I'm going to do it myself and see if NFP is something that I can start to utilize into my trading style or trading model. I'm trying to grab some pips on a very excited day, you know? It's a very eventful day, honestly. NFP it just takes off. And you can see how it takes out the sell side liquidity here that formed in the London lunch period. Now let's take a look at something like gold. So we're tracking gold currently. Let's just go on a 15-minute time frame. Keep it short and simple. I already have it marked up for you guys, but you can see, look at how it's gauging all these levels, and we're going to break it down as we go along. So just to do it quickly, this is 7 a.m. opening price, 7 a.m. open. Keep it a little closer to price action, like here. And then we're going to just go down to the 1 minute, and we'll walk through this together. Because I wasn't watching gold when this was happening. I literally don't even watch the events anymore. I just personally don't think it's worth my while. But I like to go back and back test it. So we got 7 a.m. here. And we have a buy side liquidity. So that's the 15-minute swing high, 15-minute swing low, 15-minute swing low. I'll just mark that off for guys. So there and there. And we're going to play it forward. And we'll see where price is currently. It's in a premium. Look at how it runs buy side. So in my mind, I'm thinking, oh, potentially we could have a sell setup here. Why? Because we're above 7 a.m.'s opening price. And we're also probably, and I'm only speculating, we're probably above midnight opening price. So just to go back, just to see where midnight is, because we're on the 1 minute. So right here, right? That's midnight. We're definitely above 12 a.m.'s noon opening price, or IPTA True Day's opening price. So could an ideal sell scenario unfold here, or a scalp opportunity? Yeah, it could. So we can see it runs up there. Not saying I caught this, but you can see, look at how price gives a reaction from after taking that high out and then coming lower. What does it also create? You see that fair value gap? It's a very obvious one because it's larger in nature. You see that there? Does this fair value gap cause a market structure shift? No, it does not. But this one right here, let's see, this one does though. This fair value gap here to here runs this swing low right there. So you have another fair value gap here. Trades into it. You would have been in some drawdown if you took the entry here. But like I said, me personally, I tend to find after breaking one side of liquidity, the first fair value gap that forms personally for me. So other people may disagree. And I could totally respect that. Some people say they prefer to wait for this one that makes the shift. I like to see this one because you see how it comes back into it and it's a higher fair value gap. So I'm selling at a higher price point. So there's less risk for me versus someone selling down here. They're selling lower while I'm getting an entry that's higher. I prefer that. And then after that, we can see potentially price starts to break down. And what did it do? It instantly goes back down to sell side. And then we also have our event, 8:30. So it's coming up right there. And look how we get to sell side. Now, many people may say, hey, is it done? Are you done for the day? Yeah, you can be, because this could be your only trade setup. You don't have to trade another setup unless you really want to. But here, if you were to continue to follow the code here, we've also created new buy side, right? So this is buy side now. That's new buy side up top there, right? And now we have new sell side here, but we just ran sell side. Now this sell side that just ran, could price running this get us back up to that? Yeah, it can. It definitely can. Price can come back up to this high, this swing high here. So on a 15-minute time frame, this is probably a swing high. Let's just check for reference. Of course, it exposes the move. Trading view. So you can see here, just before 8:15, right? This is potentially going to be another swing high that price can trade back into. So we go back down. We play it out. See the drop, and then right at 8:30, whoa, wow, it was just before 8:30. Gold already took off. See, the move would have left you. If you weren't in this trade before that, see 8:29, it already took off. Not even 8:30, right? Took off. And 8:30, you got this wick all the way up here. So many people, like I said, by the time they get into this market, right, they're looking to buy. And then what happens? Huge pullback on them, right? That will psychologically scare a lot of traders, right? You're going to get in. You're going to buy at the high. You're buying at the high, and then it pulls back on you. Not a great idea to do at all. You just want to either wait it out, let NFP pass, or you get into an opportunity that helps you going into NFP, and it would be a buy setup here. Not saying I would have caught that, but I knew personally, if you watch the daily update videos, I knew that Thursday most likely was going to create the swing low. And you can see here, this is Friday NFP. I knew that Friday was most likely not going to run this low, and I wanted to see it go higher because we dropped below. Same thing here, July's opening price discount. Same fractal idea here. And we have a higher swing low right there, 1, 2, 3. So I want to see if dollar is going to get back up. If gold, is going to get back up and take out this swing high. You can see the swing high is 1935.50, and we can see the high here today is 1934. 93.5. So it got really close. And I want to see if Monday or Tuesday or Wednesday breaks this high. And if it breaks that high, I would wait for any down day and then look to buy. That's how I would do that. That's what I've been noticing with this NFP model, right? The New York session model can be an NFP model. Now that's gold. Let's take a look at, let's say, I'll do something that I normally don't do. Let's look at like a yen cross, right? Not UJ. Let's look at something very different. This is also new to me. Let's look at New Zealand dollar. Let's go down to the 15-minute time frame. See that? We got down close days. Look at the buying here. Ooh, huge liquidity void here. Oh my gosh. 15-minute time frame liquidity void. Probably got ran. I'm gonna make sure I'm looking at the right thing. Oh, there we are. Sorry. Over here looking at the dead zone. Let's just bring it back here. So this is what we're looking at. We have this here, this here. We're going to find swing highs and swing lows. So that's a swing low here. Get this to 10. Try to be very organized and structured. Clean charts, my folks. Clean charts. This is the highest high we have just before 7. You see how it runs it there. So we're going to mark it off. That's what I would do. Just before 7 o'clock starts, what's the highest high that you have? Here. Right? It's also a swing high. 1, 2, 3. The high on the left is lower. The high on the right is lower. That's a swing high. Many people confuse themselves when looking for swing highs. Even here is a swing high. 1, 2, 3. That candle here is a swing high, but it's already broken before 7. That's a swing high. This is a swing low. 1, 2, 3. That candle's low is the swing low. It's not that all 3 candles is the swing low. The candle in the middle is the swing low. The candle here is lower than the candle on the left and the right. Look at that again. Don't confuse yourself. Same thing here. Candle here on the left is higher. Candle's low here on the right is higher. Candle here in the middle is lower than the 2. That one and that one. That makes that the swing low. That's how you identify it. You see a price breaks it. So you can just mark this off. You can say buy side was rated. You got the sell side here, sell side here. We're going into the New York session. So that's the opening price here. Mark it off. Keep it right here. Like I said, something I normally don't do, but we're just checking it out tonight because why not? Show you my thought process and how I like to do things. So go down to the 1 minute. We got our buy side and sell side. We can see immediately the buy side is ran. And do we get a fair value gap that's above the 7 a.m.'s opening price? We do. Where's that fair value gap? That fair value gap is right here. Very small one here. Potentially look for a sell opportunity here, trying to clean out swing lows or clean lows. We'll take this off now. And see if price will get back down to these lows here or that low here based off of this. Now, does that mean you're going to have no drawdown? I don't know. Sometimes you may have little to no drawdown. Sometimes you might have a hefty amount of drawdown and it's just about to hit your stop, and that really freaks a lot of traders out. You know, but if you're really strict and disciplined, you stick to your stop loss and you risk well, you wouldn't have any problem. The problem is when people risk too much, right? They bite more than they can actually chew, right? They're taking off more off the handle that they can actually stare with. They don't want to hold that trade because they know it's burning their account and burning their equity, and they get a little antsy, sweaty, you know, palms get a little clammy. They're tapping the foot, they're biting, gritting their teeth, something, blinking fast. They're sweating. Then they collapse the trade. As soon as they collapse the trade, I know you guys been here before because I have before my earlier years of trading. As soon as you collapse the trade, all of a sudden the trade goes in your way. Sometimes, even if you don't collapse it, it just runs your stop. So sometimes you just got to make sure the risk management is on point so you don't have to deal with those psychological burdens. So you play it out. Let's see. Look at how price respects it. Nice sell-off from there. Wow. Quick and clean too. Right? We're above 7 a.m. Think about it again. We're above again. Everything I showed you is all fractal, different pairs, and the same thing is forming over and over and over again. Nothing changes. Oh, I want to mark off 8:30. Right here. And we'll speed it up a bit. 10 is pretty fast. We'll keep it on 3. We got some time. Some drawdown definitely would have been incurred here if you wouldn't short there. But I don't think it's anything you couldn't handle, because it's probably only a couple pips above where your entry would be. Let's just measure it out. Yeah, it's about 4 pips. That's nothing. Wow. I just showed you guys another, showed you another successful New York model with New Zealand dollar versus Japanese yen. So hopefully this answers your question. Can you use the model on other pairs like the yen crosses? Here you go. Just showed it to you. 15-minute swing high rated, 15-minute swing low rated. Purged, right? Purge, revert. There you go. Isn't that amazing how simple this concept is? Doesn't take a genius to find this out. I honestly think this model, the way I approach it, you could teach this to children, you know? If you had to teach, you know, if you had children or grandchildren or cousins or nieces or whatever it is, you know, or nephews, and you wanted to teach them, you know, step siblings, whatever it is, you know, anybody that you love truly, and you want to help them out with, you know, or get them into something and they are interested in learning, I would teach them this model every single day. Every single day I would teach them, yay, did you find a New York session model? How did it go? Show me the steps. Step 1, okay, break buy side. Step 2, wait for a fair value gap that forms above 7 a.m. Step 3, take the entry. Step 4, find your exit. Step 5, high five, shake hands, and say thank you. You know? And there's going to be days where it doesn't work. Not saying the model is 100%, but you can see here, consistency actually is in this model. Now, I don't know if this model is always going to be, you know, 50% or 60% or 70% accurate. I don't know. But I'm just showing it to you guys here. And I think the model, personally, I think it's like around maybe like 65 to like 70% accurate. The other like 30, 25%, you're going to take the loser. But you can do things to limit that. And what you can do is, and this is more advice to you guys, the days you want to use the model, specifically take it on certain days. So let's say you want to take it on maybe just only Tuesdays, Wednesdays, and Thursdays, you know, or even Fridays, and you don't want to take it on Monday, or even if you're really niche and you want to do it specifically on one day of the week, you know, of course you're going to be missing opportunities, because if you're picking one day out of the week, out of the 5 days, or potentially out of the 6, because Sunday's open, it's a half day, but let's say 5, and you only pick one day, let's say it's Tuesday, you want to use the New York model only on Tuesday, you kind of keep yourself away from too much exposure to the market. You're not over trading. If you want to pick 2 days, let's say it's Tuesday and Thursday. Me personally, people asking, oh, when do you use the model, the Asian session model? Do you use it every single day? No, I only use it on Tuesdays and Thursdays generally, and sometimes Sundays. Granted, some people are confused. Sunday, I'm like, yeah, you just take Friday's range and then Sunday's range. If you check the last Asian session episode, I think it's episode 9 that we have out. I can make a lot of episodes, but I tend to just pick the ones that are really concise and show great examples of the setup forming out. Episode 9 shows I'm taking Friday and Sunday's data, making the New York lunch session, and then trading into Asian. And you can see how it's really still feasible there. But once again, look at how they draw price up above 7 a.m. and then they dump it back down. And let's see what happens, right? And now we're at the sell side here. Now again, look what's up here. What's up here? Buy side. A new buy side pool has been created by the market. Now, does that mean price can run up there? Potentially. Do I know? No. But conceptually, what have we done? We ran buy side, we ran sell side. What's left again? Buy side. Buy side is left again. And we'll play it out, see what happens. A 30 hits, and look at what happens. We get really close to it, honestly. I'm going to see the pip on that. 88.54. 88.54. 47. Let's see if it's 47. Yeah, same. Look at the high. 88.547. That's the high there. And then the high of this swing high here is 88.547. Isn't that crazy, man? How does it know to stop right there on the dime? We'll see as the price trades throughout the New York session. Right? We're still going through it because this is 10. and see what happens. Thought the rest of the day would speed it up real quick, just for the video's sake. And that's where we are. So I definitely think that there is something to study with this. So with that being said, I'm going to leave you guys off with this. Hopefully you have learned something today. Hopefully I reinforced something or made something a little bit more clearer. I know I may sound like a broken record to many people. They're like, oh, he talks about the same thing all the time. But what am I going to do? Why fix something if it isn't broken, right? It's a really good model. So don't overthink these markets. Don't psych yourself out of trades. Pick selective trades. Use what I'm telling you here and capitalize on it. You have an opportunity here. Don't waste time. Peace.